will decode the Fed meeting, S&P 500, dollar index, gold and silver, and the Nifty analysis. Hello, everyone. This is Shilpa Raidas, and we have Jay Vora with us, and we all welcome you to Midweek with Indiacharts. So, Jay, how are you doing?
I'm fine. How are you doing?
I'm doing very good, Jay. Thank you so much. So, Jay, I would like to quickly begin by asking you that we have the Fed meet today. What do we expect from that meeting, and how is the S&P 500 index poised at this moment, Jay? And also, I would like to add on to what's the view on dollar index, gold, and silver for you right now, Jay?
Yeah, so we have a lot of interesting things this week. I mean, Bank of Japan has already raised the rates, and the yen carry trade, which used to happen. I mean, that seems to be reversing. However, firstly on that, many people would be thinking that uh, that the Bank of Japan has raised the rate now. That is negative for the market. So far, I mean, sentimentally, yes, but just 10 basis point hiking doesn't change the world entirely. I mean, in terms of free money, that still prevails. But yes, obviously, the direction of the trend will now be important to see. But broadly, I think now the focus will be on the Fed meet, which we
Right.
have today, and today will be important because Fed would be guiding as to what it is going to do for this year. Okay, so if at all, I mean, I think the market expectation is somewhere around 4 rate cuts. Okay, if that doesn't happen, I think that will lead to some disappointment, and I think this we had discussed earlier as well. I mean, if we see in the recent times, crude oil has moved higher. Commodities have seen some rally in the recent past. Now, also, I am frankly not sure how far the impact has been of the Red Sea issue, which was going there. Okay, maybe in the quarterly result, as the companies disclose, that's where we'll get to know the impact. But yes, I mean, some amount of impact will be of that as well. So overall, we need to see how the Fed behaves. My sense is that, I mean, whatever they say this time around, that is what they are likely to follow, because they have been sticking to their guns right now. And the important, I mean, I am frankly not sure, how many rate cuts is going to happen. But, if we go by the Fed's language, what they had said is that it is better to keep the rates higher for longer rather than cutting it too soon, until and unless you are not sure that the inflation is declining.
Right.
So the inflation seems to be declining, but the pace at which it is declining, I'm not sure if the Fed is happy with that or not, because I think this time around, the CPI data was slightly above expectation. PPI data was slightly above expectation. So we need to see basically how things unfold. But yes, I mean, 4 rate cut is what is expected. And I think it is the language of Fed that will be very important to determine as to how things are going to shape up in the future policy. Now, quickly, let me share my screen and share with you the dollar index chart. So we were discussing about this last time, that it needs to overlap the previous high. If it does that, then the decline will become 3 waves. And so far, what we can see is that there is an up move. The pullback has been 61.8%, and now it is breaking out from the channel. Okay. Now this is actually indicating that the dollar index should rise higher. And one of the possibilities which we had discussed last time was that it can, probably even rise higher towards 108 or so levels. And if that happens, I mean, that is not going to be positive for the equity markets. In fact, it is going to put some pressure, because usually whenever the dollar index rises, that is, sort of we can say that shift towards the safety. And that's where, sentimentally, it doesn't bode well with the indices. So obviously, each indices we will analyze in a while. But when we look at the dollar index, I mean, it seems to be the case that dollar index will break above the previous high of say somewhere around 105. And if that happens, the risk of a rally towards 108 opens up in the short to medium term. In fact, one more interesting setup is of USD INR, which has recently rallied. I think even today it has rallied. So when we look at the USD INR, it has been in this very tight range for a long time. And when we look at the weekly chart, finally what it did was that it broke this blue line, which is the 40-week exponential average, for a brief while. But then it has made a very good comeback. And in fact, the weekly RMI is now going to turn bullish. So I was just thinking of the wave count, and one of the wave count which I could think of was that this was a triangle. So some degree of fourth ended over here. Then this was wave one. This entire consolidation was wave two, and now wave three should unfold. I mean, if that has to happen, then I think some bit of pressure even Indian markets may feel. So we are already feeling the pressure, but I think this may add to those pressure points. Obviously, we'll talk about the sentiment data and how the Nifty indices are poised in a while. But yes, the setup on the currency specifically is not looking good at this point of time. Now, when we come to gold and silver, so we had discussed this last time, and the reason why this setup is important is because if this turns out to be an ending diagonal pattern, okay, then it is actually a bearish pattern for gold, and it will be an nth attempt to break above the all-time high and then falter. Okay, so we need to see how gold and silver also unfolds, because silver to some extent, I mean, it just fell short of the previous high. It just fell short of touching the upper end of this entire consolidation pattern. Or else I was expecting that this level may be achieved. So obviously we need to see after Fed outcome what happens. I mean, do we see a rally in the precious metals or no? But yes, I mean, precious metals are also very importantly poised at this point of time, and we need to see whether the averages are getting broken or no, because generally when we start seeing a trending move, then the averages should not break. Okay, so for gold, if you see, I mean, the averages are still very far. So whether it tests this averages and again start its up move or no, that needs to be seen. But yes, in the near term, there is a risk of a correction up to the averages that is possible in gold. And if at all we see a break above the previous high, then it might start looking like 1, 2, 3, 4, or 5. Now, again, it would be very tricky to say, whether this is 5 or no, because I mean, if we go very minutely, then this can be 1, 2, 1, 2, 3, 4, 5 as well. So the broader idea is that whether the gold the comics gold breaks above this trend line and sustains or no. Okay, if it sustains, then yes, there is a chance of a breakout that can happen. So that is an ongoing process. We'll see how things unfold. But yes, as of now, there is a risk. There is definitely a risk that we can see at this point of time, which is a wedge pattern. Okay, if this turns out true, then it may not necessarily be good for the gold.
Okay. Jay, we have also seen some weakness in the past few days in the key Nifty index, right? So is there more pain left, or is the correction getting over? And what are also the data points on strike telling us right now, Jay?
Yes. So over here, one thing that I want to, right away clarify is that from a medium-term perspective, I think that we are headed for a deeper correction. It could be price-wise or time-wise that we need to see. But in the short term, so by short term, what I mean is that probably 3, 4 days or 5 days perspective, there is a case of a pullback. Okay. Now, we will discuss this along with the help of the sentiment data on strike. Why do we feel that? Okay. But one thing that needs to be clear is that from a medium term perspective, this has turned bearish because the Nifty index has possibly seen a 5-wave decline. Okay. Now, whenever we see a 5-wave decline, so that means that the direction of the trend is down. What may happen is a 3-wave pullback and then again a 5-wave decline. And this structure may end up looking like either A, B, C, or if the decline has to be bigger and it has a lot of ground to cover on the downside, then you might end up seeing a larger 5-wave rise from the top. Okay. So that is what we will navigate in the days and the weeks to come. But yes, in the near term, there is a possibility that if today's low, that is 21,710, if it holds, then we can see a pullback in the near term, and that pullback could be towards, back to wave 4, because when we do the 61.8% retracement of this entire decline, okay, that comes to around 22,214, which is very close towards the previous wave 4 level. Now, but yes, if the low on the downside breaks, okay, if today's low breaks, then we might have to consider extension, because this also looks like a 5-wave decline. Okay. Then, this was something that we had discussed this in the intraday video update as well, wherein this will become a 5-wave rise, which will become 1, 2, okay, and again a 5-wave rise will become 1 of 3, okay, and then there will be a pullback, and then 3 of 3, and so on. Okay, so if that happens, then there will be a long way to go on the downside. So the broader idea is that if the blue line on the upside breaks, okay, which is right now at 21,985, then we should probably see a deeper pullback. And, somewhere, if I see the sentiment data, then I feel that probably we might see a deeper retracement. Now why? Because when we look at the daily swing, okay, so all the people who don't know, daily swing is basically we run it on the FNO stock, and we run basically on RMI. Okay. So RMI across all the FNO stocks, we see if the momentum is rising or going down, and accordingly we plot it. So today, when we had seen this bounce, we can see that the daily swing has bounced back from the oversold zone, and it has gone up to 65. Average swing is slightly medium termish, okay, where it takes a little time to turn around. The reason being that average swing is a smoothened, we are further smoothing it by putting a moving average on the daily swing. So it will take a little time to turn around. So whenever, both these things are in oversold zone, typically we see a bounce in the short term. Okay, now people who follow weekly options and all, it becomes very helpful for them, especially from the risk management perspective. Okay, so you can see over here that the daily swing and the average swing, they both had come towards the oversold zone. And that's where when both of this come to oversold zone, that is a point of a good bottom that can form in the market. Okay, now the only way this won't work is when we have a free fall sort of market. Okay, like we had it, say, in 2020 or so. If we see that kind of free fall market, then it will be difficult then basically to gauge when the bounce will come, because what will happen is that there will be minor pullbacks that you will see from time to time, and then again it will come down. Okay, so the only point, once again I am repeating, that the only point when these all sentiment readings will stop working is when that we are having a very strong trend on the downside. So whether have we started that trend or no, so far, we have not seen that, because this is the first pullback that we are getting from the top. Normally, people have this, because we have been in an uptrend, so people usually latch on to the dips, okay, and they usually have this buy on dips mentality, and that is where we do get pullbacks from time to time, especially when the decline starts, okay. But as the trend picks up and people realizes that the trend has changed, that's where we don't see very big pullbacks. But initially, I would expect that there will be pullbacks, and like I showed, that the decline has five. I mean, the Nifty has a 5-wave decline from the top. So yes, there is a good possibility that we see a pullback, and only then we decline. And so I was showing you the daily swing, but even if you see the market breadth indicator, which is the 20-day average, so this we take across all the BSE stock. Okay. The reason we take BSE stock is because it is a larger universe. And that also, if you see, it has come back towards the second red line. Okay. So, and in fact, when we see many other diffusion indicators as well, okay, like percentage of stock above the 20-day average, and that too, like for Nifty, mid cap, small cap, and so on. I mean, over there as well, they are reaching towards that oversold zone. So you can see that Nifty index, the reading is 20, that index are trading above the 20-day average. Okay. In fact, when you see for the small and the mid cap index, I mean, it is literally down and out. Like you can see that this percentage had gone to 3%. That means out of 100, only 3 stocks were above the 20-day average. Okay. So I mean, normally when we see such sort of readings coming to this low point, we usually tend to get a pullback. Okay. I mean, you can go back in the history and you can check. So over here as well, in this decline, it got back towards the second line. Then there was a pullback, and then again when it kept declining, we end up seeing a positive divergence. So that is definitely possible, right? So you can see uh, this ratio, I mean the percentage talk about 20-day SMA, that line coming and bouncing back a bit, and at the same time we might also see some sort of pullback in the small cap index. But I think from a medium term perspective, we had discussed this earlier as well, that a 5-wave rise from this low is getting over. In fact, I mean, when we do it on the daily chart as well, I mean, when we do on the monthly chart for the small cap index, there is a possibility that rise from 2020 to this high is over. If that is the case, I mean, that is a extreme bearish scenario. And frankly, I'm not sure, whether we take it as, I mean, this as 1, 2, 3, 4, 5, or should we consider it as 1, 2, 1 and 2? Okay. So that's where we are keeping both the alternates open, and we basically want to see how the correction unfolds. And based on that, we will form the view, because, say, for example, if there is a correction that we see in the small cap index, and we see all the sentiment data or many of them, reaching towards that extreme on the downside, then we would be open to thinking that a bigger correction, I mean, a correction of this 5-wave rise could be getting over. So again, it would depend upon the situation, but like we always say, when you see a risk, I mean, you have to think of worst case scenario. Okay. In this case, the worst case scenario is that a rise from 2020 to 2024 is over, and we get a deeper correction of that. Okay. Once you have that frame of mind, then obviously you will do your risk management, and falling into those pitfalls is slight. I mean, you might dodge with these sort of meaningful correction. So that is the whole idea. And also, then when you look at the percentage of stock above the 50-day average, even that is coming towards this oversold zone. So, for Nifty specifically, I mean, we might not see this ratio in the oversold, but if we see the broader market, I mean, it is down and out, and it has seen a meaningful correction. And that is what you can also see in the breadth indicators, which I had shown you. So it was not just the AD ratio or 20-day average, but it is also the 40-day average which had gone towards the oversold zone. So you can see over here as well that the 40-day AD advanced decline ratio, even that has come towards this first red line. So it is specifically when it comes towards the second red line, that's where we can start thinking that is a major bottom done or no. But still it is away, and we need to see basically how things unfold. Now, when we look at the mid and the small cap index, I mean over here, so also one more reason why we are anticipating some sort of pullback in the near term is because when we look at, say, Nifty index, okay, it has broken past the previous low and it has made a lower low, right? If you see Nifty 500, again similar situation, it has broken the previous low by a small margin. If you see mid cap, it is more like a double bottom that you can say. I mean, it has come very close towards its previous low. But if you see the small cap index, okay, it is very much above its previous low. Okay. So we are seeing these sort of intermarket divergence in the short term, and we are seeing the sentiment, all the sentiment indicators also coming towards the oversold zone in the short term. So when we have these kind of things happening, typically we get a bounce. Okay, but this is just to once again clarify that from a medium term perspective, even from a conservative case, if we take, then at least a 5-wave rise from year to year is complete. And in fact, there are many ways to take it, but also we can consider a rise from 2022 till date, that has complete. And even if that is complete, then, it can see a meaningful correction in the short to medium term. And also if we draw the channels, it has taken resistance at the upper end of the channel. So there is definitely a risk that over a period of time, whether we see a sharp correction or a time-wise correction, there is a chance that, it can even drop towards the lower end of the channel. So in that case, I mean, it can be painful, and many of the index or the stocks can see meaningful beating. In fact, even when you see the Bank Nifty, I mean, Bank Nifty looks like a classic wedge pattern. And over here as well, I mean, we had discussed earlier about this, that the weekly averages, okay, on the weekly chart, the RMI is turning bearish for all the indices, right? So as long as they doesn't come back towards the zero line, okay, we would wait patiently till those correction unfold. Because even for the Nifty index, if we do the weekly chart over here as well, you can see that the weekly RMI has gone in sell mode. Okay. Even if you take the mid cap index, that has gone in sell mode. If you take small cap index, that is very close to now, coming towards the zero mark. But yes, I mean, we have to be a little patient, and probably the downside levels everywhere to watch out for would be the 40 week and the lower band, especially in the cases where the 20 week is broken. For the Nifty index, it is still above the 20 week. So the 20 week is right now around 21,400. So that would be the near term downside level to watch out for the Nifty index. If that breaks on the downside, then yes, I mean, we are looking at a correction probably even till 20,600 or so. So that's how all the Indian indices are poised. And yes, I forgot to cover the S&P 500. I mean, if we see the S&P 500, that is relatively strong. And again, from a global market perspective, we are seeing some sort of intermarket divergence where the Nifty index is now turning weak, but the US markets are still relatively stronger. And if we specifically see the S&P 500 index, I mean, it has done some consolidation over here, and that, probably seems to be, I mean, that might end up breaking on the upside. That is the sense I get when I look at the chart. And even if we see from a Fibonacci retracement perspective, so 123.6% of this decline which was at 2131. The S&P 500 is trying to break above that. So now that leaves an upside room open till 5325.
Hmm.
That can happen. Maybe in that process, where S&P 500 rise higher towards 5325 mark, we may also end up getting that pullback in wave B, which I'm expecting. And also the oversold conditions that we saw specifically for the oversold conditions that we saw in the sentiment indicators, even that may end up correcting, and it may see a rebound from the oversold zone. So that is how basically the entire setup is. So we need to keep us very close eye specifically on the dollar index. And I think if this 105 high is broken on the upside, then that's where I think market will start taking notice of that, and maybe some panic can get created in the short to medium term perspective.
Okay. Well, thank you so much for the comprehensive analysis, Jay. For those of you who haven't tried Strike, I'll be leaving a link down on the description. So you get a 7 days free trial once you sign up. So sign up right away. I'll also leave a link down for Strike's Twitter and YouTube channel. So do sign up and subscribe to the channel, because that is where you get all the information from Strike first-handedly, and you also get tutorial videos where you get to know how to use Strike. Okay. And thank you very much, Jay. That was amazing. I'm looking forward to see you next week on Midweek. Take care.